My name's Cornell Dixon. I'm head of growth at Plumery, so we're a digital banking experience platform. What does head of growth mean? It ultimately boils down to helping our customers grow and helping Plumery as a company also grow, whether that is through the kind of relationships that we broker with our partners, many of whom are here at Money 2020, or whether it's directly engaging with them to help them grow their own business, share of wallet and portfolio within the industry. The whole premise of being able to move and execute quickly in the market, if you're looking at EMIs, NEOs, it's key for them. Like, how are they going to get market share? It's by being first, it's not by being last, it's not by having necessarily the biggest asset base. And that's what we see with Revolut, for example. They were some of the first to actually launch into market with a number of items that were what customers demanded. Second to that is selection process. Obviously, if you need to move quickly and it takes 24 months to actually choose something, right? A partner to help you change, a process that you need to augment, or whatever it might be. By the time you finish, the game has changed. Imagine trying to make an investment nowadays when AI just came out of nowhere and all of a sudden completely changed the rulebook, like around 2023. Being able to move quickly and adapt is, I think, probably the biggest strength. And that also comes not just from the management team, it's board down. They need to be able to unlock and work with their management team and the internal sponsors to actually be able to execute these kinds of things at speed. Otherwise, they get bogged down in making no decisions, which sometimes can be good for the business. It's not something that many people actually want. They want to be able to change and move up with the times, and oftentimes technology refreshes are part of that. It was talking about you're golfing in really foggy conditions, or foggy and it's dark, just terrible conditions. And it's like, what's the best way to actually go from the tee to the green and into the hole? Is it to use a driver or is it to use a putter? And realistically, it's probably the putter, right? You have to take more incremental steps instead of big swings. But ultimately, it's actually less risky in the long run because you're able to get to the hole with a lot more accuracy. And I think it's very similar actually in terms of how I see decision making happening nowadays. These big rip and replace programs are very costly and ultimately very risky, because if you're having to replace many systems, potentially many points of failure, lots of cash investment and time investment, what's at the end of that? It's a huge amount of risk. Both with Plumery, but also just in general, the approach that many banks are taking is more of a progressive modernization approach. So really looking at either the individual channel or really the individual use case and going, okay, how do we then work our way backwards to the systems that we need to use? Could be a legacy system that's already existing, fit for purpose, or to actually bring in another partner to help them out, whether it is, for example, a light cloud core banking to help with a scalable wallet proposition, or whether it is a brand new KYC AML partner, for example. I think that's really where we're getting excited about helping clients to be able to move faster and with less risk when it comes to these kinds of transformative programs. And also, let's just be fair, like, people don't want to be throwing around, billions and billions in cash and investments in replacing one mobile app with another mobile app. There's more to it than that. There's definitely some nice spin-off initiatives that many banks have done. Here in the Netherlands, you look at Tikkie, it's become a verb, right? And pretty ubiquitous across the industry. Here we've also got the likes of Bunk, who have come in and who have iteratively, moved from being a very sort of bare bones, almost kind of banking application to something that is actually quite feature-rich nowadays with more than just financial services. And those weren't big bangs, they were quite incremental. Still see that many of the larger banks do struggle with some of these challenges, mainly because of the technical complexity that they have and the people complexity. Because being able to make quick decisions and move mountains and having to get the right sponsorship internally, get the right budget to be released, it's a real challenge that I see with many banks. So again, that's why we go more towards that progressive modernization approach. I'm also a Revolut customer. Unfortunately, I'm not with Nubank, but again, they do very well because they're there where the customers are. They personalize the offering. They really do their marketing very well. And, they're targeting people who are digital natives back before mobile and digital and everything. If you lived in a village, right, I'm up from the north of England, so, in my hometown, we had a Lloyds, an HSBC, a Barclays. So if we would go there, that teller would probably know my dad, because they grew up together. He knows he's a good guy, he's good for the loan, he'll get a nice rating. Or, somebody else will come in and go, oh, that's that scallywag. Okay, we need to manage our risk here. We need to apply that same kind of approach and that same kind of proximity with digital. And I think banks like Revolut do that really, really well, because they bring that humanity, that kind of human approach onto the screen. I don't actually have an answer for that. I mean, I have an opinion, but I think great is ultimately very individual. So what you see as great can be very different to my version of great. And on paper, we might be very similar age, similar income, similar area that we live in, similar lifestyle. How we spend and how we save and how we do everything could be very different. I do see that the banks that are able to leverage the way that they communicate with customers and marry that with the data that they have, and to do that in a consistent manner, they're going to do very, very well, because again, we're going to be able to go down to, I think they used to call it, like a segment of one, basically, right? That's ultimately where I see the ball is rolling, and I think that's where great will be. And ultimately, great is going to be very dependent on the types of customers that a bank is going after, because now we have a lot of choice as consumers. If I want a bank that looks after me when I'm going to travel, again, we'll look at the Revolut kind of example or similar. If I want a bank that's going to help grow my money and probably go to, more of a specialist institution, I think ultimately that's what great looks like. Either way, being able to be there where the customer is and help them with their problems, that's, I think, still where many, many, many institutions fail. I forget my PIN all the time. So I take my credit card and I go and I try and put it in and I go, oh, what is it again? I can't do it in app. They have to send me a letter within 5 business days where I have to tear it off and I see my PIN. That's just not acceptable anymore. Really finding that balance is critical. Full ownership probably doesn't make sense for most things, having full on-premise servers, having full, on-premise data host, okay, probably not going to happen. On the other hand, really being able to own some of the user experience and have a unique brand and differentiator, I can understand why banks want to own more of that piece. That's also why we've basically built our platform to be able to accommodate both buy and build, because we recognize that some banks want an accelerator, but some banks really want to own their destiny there, and they don't want to be restricted by a platform or any other kind of vendor. So we see that as something that many banks should own if they can. Here's if they can. And if they can't, there are lots of great alternatives like us who can actually help them out with the accelerator there. One of the main challenges that I've seen in many conversations with banks of all shapes and sizes, both from EMIs and NEOs all the way through to the larger established ones, the core is fixed to an extent. It's a known quantity. It's probably going to be there for 10 years. The channels they've built in-house, it's that bit in the middle. How do you make sure that all these disparate points actually consistently talk to one another? And that's really, I think, the problem that we solve. And that's actually one of the hardest ones, at least from the conversations I've had, for banks to fix while running a bank. It's one thing to build, but build, maintain, and run, and be compliant, and make money, it's a challenge. Most banks know that they need to do something, right? They know that they will need to upgrade a system. They know that they will need to respond to a customer demand. I still see many, many, many of them taking a long time debating what that should be. I love doing my research and thinking about things before I act, but sometimes, doing is better than thinking. Filter out the companies that don't work for you or the options that don't work for you, and to filter in the right option. Get that down to 2 months, instead of spending 9, 12 or 24 months making that selection. Banks always tell us, and trading companies tell us, it's time in the market. That's the important thing. And I think the reverse is true. being out there in the market, being first and launching, I think will provide so many valuable lessons as well as potentially revenue in comparison to debating it in a boardroom or in a meeting room. I think AI is already being done very, very well and very right in many organizations. They use it across fraud systems, AML systems, even like payment routing. Like many companies and many banks already make fantastic use of AI. Everything that we're talking about when it comes to agentic, etc., it's a way to be able to deploy capital more easily in terms of workforce. So, one person, one engineer can be way more productive. We see that not just in my financial services, we see that everywhere, right? That's going to be the interesting tipping point about how that's being used. Many of the challenges that banks today have is actually like how they deploy AI in a way that's going to be consistent, especially in the European Union, with regulation today and most likely regulation that will come in the near term, because this is not something that's going to stay as a completely wide open playing field as it is for the moment. So I think being very conscious about how we deploy it, whether it's servicing customers, I think that's a very simple and very effective use case, or whether it's being able to use it to extrapolate and infer data patterns, customer behavior within 2 to 4 months instead of like 6 months plus, and be able to make data-driven insights around, should we create this feature or not?